following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Keith in Philadelphia. Hey, Keith, what's going on?
Hey, Tom. How you doing?
I'm doing great, man. You having a good day out there?
Yes, sir. Yes, sir. So, a couple things, Tom. Number one, I started listening to you in 2001 and never stopped. Yep, and I owe you a lot, my family as well. Okay, this is the first time I'm calling.
I appreciate that, man. Thank you so much.
And now, here's Tom O'Brien.
Good day, traders. Hi, folks. Welcome to the Tom O'Brien Show. I'm your guest host, Steve Rhodes, coming to you live from the TFNN Television and Radio Network. Yes, Television Network, folks. You can watch this show live on Tiger TV. What you want to do is you want to go to the homepage of TFNN. You'll see a tab up at the top section that says Tiger TV. It's the best way to catch this show because you can watch it live. You can take a look at my charts, my screen, anything that I've got up here, because we definitely want to be able to educate you. And, folks, I don't know if you know me. Let me introduce myself to you. I'm Tom's business partner at Tiger Metals Exchange. I also host a number of radio shows, or co-host a number of radio shows around here. I kick things off in the morning for us at 9 a.m. on a show called The Trader's Edge. I do that Monday through Friday. Then Tom and I do a show together from 10 to 11. And then on Tuesdays and Thursdays, I come back. That's my long day, if you will, from 11 to 12. And I finished up with the Trader's Edge. And it's absolutely a blast to be here with you. This is so much fun for me, to be able to do this show, to be able to reach out to folks. And what I do is I teach pattern recognition. We take a look at swing points, ABCs. We take a look at anything, commodities, currencies, futures contracts. So in the morning, actually, what we do is we start off with the futures contracts because we get an opportunity to see what's been going on overnight. Are there any patterns set up? And if you caught yesterday morning's show, you know that we took a look at synergy in all of the when I say all of the markets, I'm talking about the four major indexes, the Dow, the Russell, the NASDAQ, and the S&P index, and we saw all these beautiful patterns. If you turned on the television, you would have thought the world was coming to an end, but if you turned in to Tiger TV, if you tuned into my show at 9 o'clock, what you would have seen is you would have seen all these patterns set up and would have given you an idea of what it was that you needed to look at for your day. So please tune in at 9 o'clock in the morning. I absolutely love being here with you. Tom and I hosted a workshop this past Saturday. So many of you, we had great attendance. Many of you listening right now probably had an opportunity to, if you're local, you had an opportunity to show up there. And it was a really privilege for me to be able to meet you, to be able to share some of my thought process because, trading, folks, is basically 80% psychology, 20% mechanics. That's why you're tuning in here. You're tuning in with me. You get both. You absolutely get both. The folks that were at the workshop, they absolutely saw my passion. Hopefully, you get to see my passion because it's all about growth and contribution. I want to help you grow. I want to contribute to you. We've got a call-in number. It's 877-927-6648. Absolutely love to hear from you. Look, I know the value of your time. I absolutely do, and I really appreciate your presence here today. But mostly, folks, I am just grateful for the opportunity to serve you. Again, our call number 877-927-6648. And before we get into the numbers, there's really only one thing that you need to know about me. I learned long ago that the way that you do anything is the way that you do everything. And folks, I'm very logic-based. I'm very patient. I'm very thorough. I'm a natural-born provider, probably much like yourself. I'm passionate in absolutely everything that I do. It doesn't matter whether I'm playing golf, whether I'm here on the air, whether I'm taking a look at charts, whether I'm working for my clients in a newsletter. I absolutely am passionate and grateful for everything that I've got in my life. So, folks, I'm grateful for today's market action. So let's go take a spin around the U.S. We'll take a spin around the world, see what's going on. We had the Dow finish up 131 at 10,939 with its next stop likely at 11,000, the 11,000 area. And then a final destination of 11,162. Now, that 11,162 would be the 0.786 retracement. That's what I've got up on my screen. We'll come back to that in a moment because we had the S&Ps finish up 20 at 1144, and its next stop looks like it's headed for 1149, and then the final destination of right around that 1169 area. That, too, is the 0.786 retracement. I want to show you why it is that I've come up with that. We'll go take a look at those charts. We'll take a look at the past. We also had the Russell. You know, we had a big day in the marketplace yesterday, not as big as yesterday, not as big as the turn yesterday, but we had the Russell finish up 9 points at 658, and its next stop is really just a point away. So it's going to get up to that 659 area, maybe pull back just a little bit with a final destination somewhere in that 674, 685 area. And then we had the dollar. The dollar, it's all about the dollar, right? Finished down 69 ticks at 79.41. You had gold finish up 25 at 16.41. Silver up 64 cents at 30.48. Light sweet crude. Holy cow, folks. Light sweet crude up $4.08 to finish the day at 79.75. Again, 877-927-6648. We had Europe was up big time, and Asia was down. And it's basically up, down, all around, all over the place, the roller coaster ride. So let's go take a look at the Dow first. So I've got the Dow chart up on my screen, and what you can see here is you can see the low that was put in yesterday. That low, folks, was at 10,404.49. Now, if we just simply go back to the last swing point, which is what I want to do, the last swing point here was on September 27th. The high that we had there was 11,369. If you use your retracement tool, you know, and that's one of the things that we teach you here. We want to teach you sacred geometry. And in that sacred geometry, what we're talking about is we're talking about really 5 or 6 numbers that you need to memorize. From a retracement standpoint, you're looking at floor 0.382, 0.618, 0.786. Those are numbers that for whatever reason, because it's really all about emotion, that's really all that the market is, it's all about emotion, they're floors that tend to stop at. They let people off the elevator, the elevator, folks get on, and you determine, you know, where the market's going from there. Is it pulling back or is it going up? When we take a look at the Dow yesterday, you can see that it made it up really to the 0.382 area. That's this dark green area that I have on my screen here. That's the 10,779 area. And then, you know, where it's headed to is at 11,000. I mentioned that it's likely going to head to the 11,162. That's the 0.786 retracement area. Why did I come up with that? Well, let's go take a look at the last leg down, because this has been a roller coaster. And what you can use from a pattern standpoint is you can use patterns to see what is it that's unfolding in the marketplace, because the reality is you're listening to this show. This is your pattern. Now, I know I'm upsetting your pattern because you were expecting to hear Tom, and instead you've got me. Now, this is going to be, I'm going to teach you that sometimes changing your patterns is a good thing. In fact, it's a really good thing. If you get cued in to only doing one thing, how are you going to take advantage of the market when it's going up and down? Because we don't have an opinion about the market. We like the market to tell us what it's going to do, and then we go ahead when our back is up against the wall, we go ahead and place a trade. And so if we take a look at the pattern in the market here, I'm simply going to go back to the last time that we had a swing high to swing low. That's going to be the September 20th point on the Dow. The high there being the 11,550, go all the way down to the low that it made just 3 days later. And that low there, folks, was at 10,597. You'll see that the 0.786 is 11,346. Where does the Dow bounce back to? 11,369. And that was 11,386. It did a 786 retracement the last time. It did a 0.786 retracement the time before that as well. So I think that's the area that you really want to key in on. And if you see the volume slowing down, then that's telling you that we're ready for the next move down. That's just the market breathing. That's not a negative thing. It's just the way that these markets work. We're in a bear market, a big bear market, worst bear market that any of us have ever seen. If we go over to the S&Ps, what you'll see here is the same thing, where I've got my retracement ruler, if you will, going from the last swing high that we made there. That was on September 27th, the high of 1195, all the way down to that low of 1074. Now, if you take a look at it, yesterday it just retraced back to the top. A good day for the bulls, a good day to push the market up. It was all done really in a matter of just about 15 minutes or so, if you will. And today, what you can see is it didn't retrace that much. Pulled back a bit in the early morning session, and then it moved up, and it's moving towards that 0.618 area, that 1149. I expect we'll hit that tomorrow. We'll see a pullback, and then it will motor on into that 0.786 area. again, if I just simply take that retracement ruler that I've got and go from the swing high on the 20th all the way down to the swing low 3 days later on the 22nd, you'll see that the 0.786 of that move would be 1197. Where does the S&P get up to? Gets up to 1195.86. 1196. In my work, folks, that is good enough. So it made that same type of move. I think that's the pattern that's underway here. We're going to watch for that. If we go simply take a look at, let's switch over to the ETFs. And on the ETFs, because I know most folks take a look at that, and we can take a look at the volume patterns that we've got out there. So let's look at the small caps, all right? The small caps are the IWM. Now, yesterday morning, if you were listening on the show, the small caps were where it was at to be able to release information to us. And the reason is because it was making one of those beautiful butterfly patterns. That's an expansion pattern. You know, I mentioned that you want to learn those three numbers, those 382, 618, 786. Well, there's 2 or 3 other numbers that I'd really like you to know. Those 3 numbers are 1.272 and 1.618. Those are expansions of swing points. And then when you've got that, sometimes you have what we'll call a super expansion. Well, super expansion would be 2.618. So it's not too much to remember there. Now, in this case here, we made just slightly more than a 1.272 butterfly pattern. If we looked at the futures contract, it actually made the 1.272. So you want to be able to correlate futures contracts with the ETFs because the futures contracts, you know, are basically trading around the clock, if you will. So there's more information to release to us, especially more information early in the morning, you know, in that 9 and 9:30 range. Actually, before then, at 6 in the morning when you've got Squawk Box coming on and they're giving you all the fear. The reality is nobody yesterday was telling you, other than at TFNN, us at TFNN, telling you, wow, this is really a great setup. You've got our backs up against the wall. You've got all these patterns coming together, and it would help you in your trading. Now, in this case here, what you expect on a butterfly pattern is exactly what we saw here. You expect to see an explosive move because a butterfly pattern, because it's an expansion, I like to picture a rubber band that's running around my finger, okay? And when you do a butterfly, you keep wrapping it and wrapping it and wrapping it. And when you finally let go, that rubber band's going to really release a bunch of energy, just like the energy that I'm releasing right now on the air. I've been on a butterfly pattern, if you will, for the past couple of weeks, if you will, because of the workshop that we did. And so all I'm doing is just releasing energy. Well, these small caps, the IWM, did the same thing. Now, what you see on these butterfly patterns, and it's so cool, is that you typically will see a 0.382 retracement. At a minimum, you'll see a 0.382 retracement. How often? Not all the time, but darn near most of the time. And what did the small caps do yesterday? Oh, it said high to the 0.382 and buy to the 0.382. It just crushed right on through there, and it was making its way up to that 0.618 area. Well, the small caps are really still something to watch because they're the ones off the bottom. We had been watching the Qs because they had been the strongest index, but over the last several days, they haven't acted so strong. Why? Because it's so weighted with Apple, Google. We can go take a look at those stocks, see what's going on there. They've got some problems going on with regard to that index. So it's the small caps we want to see. You can see it got up to the $65.84 area. That was a 618, closed just below it. The next stop, where it's going to release some information, and then we want to pay attention to small caps, folks. It's going to release some information right at that 0.786 floor. That also is the swing point from September 27th. We come into that swing point on less than 93 million shares and close below it. You know, it could be good night, Irene. Anyways, 877-927-6648. Give me a call if you'd like. I'd love to hear from you. We'll be right back.